Hi, this is Darren from Property Prosperity. I thought I'd have a quick chat today to you about if you're thinking about buying a block of land and building a house. I get a lot of people not too sure about the whole finance thing works. So they're just worried about, okay, so I'm going to buy land first and then I'm going to build a house, but how am I going to get my loan? So I thought I'd quickly run you through it just so you weren't so stressed about the whole process. So basically, the thing you got to understand is the bank's lending you money. They're looking out for themselves at the end of the day. So what they're trying to do is the first thing I want to make sure is you can pay your loan back, and that's going to be based on your income. So the income thing, that's what they call is serviceability. So that's them determining how much it costs you to live and then how much you've got left over to be able to repay your loan. So that's actually a calculator. So they actually calculate, different banks calculate in different ways. So you'll find that some banks will lend you more money based on your income, and other banks will lend you less money based on your income. So that's the first thing to consider is your ability to borrow money based on your income. And the second things you got to consider is how much they're going to lend you based on your how much cash you're putting in. Basically, I suppose the way the banks look at it, if they can't you can't repay your loan and you get behind on your interest payments, then they end up having to sell the property on you. So then the question is, okay, if they have to sell the property on you, they don't want to lend you all the money, just in case, if the market goes down, they might not get their money back. So generally banks only want to lend you about 80% of the value of the property. If they lend you any more than that, they can consider it risky, basically, because they know if they only lend you 80%, if they had to sell your property on you, there's a good chance they'll be able to sell at 80% of the value and get their money back. They will lend you more than 80%, but any more than 80%, they'll look at that as being risky, and they'll charge you something that's called mortgage insurance. Mortgage insurance it's not there to actually help you out, it's there to help the bank out. So if there's a shortfall between the price they sell the house for and what the loan amount is, then the mortgage insurer, they're going to come in and cover that shortfall. So that's what mortgage insurance is, basically. So that's basically the two things banks are caring about. What they do, though, is if you're buying a block of land and building a house, they don't really care about what price the land is or what the house is. They're looking at what the overall price is, because they're assuming then you're going to build the house and then you're going to live in the house and you're going to be able to repay the loan based on a finished off house. And obviously, if anything goes wrong, they're valuing it based on the finishing off house. So as far as they're concerned, they're not too focused on the land price plus the house price and the house price individually. They're more focused what the overall amount's going to be, and they'll determine your ability to repay the loan, or the serviceability, based on the end price. And likewise, they also determine how much you're contributing based on the end value of the end property as well. So they're going to look at lending you 80% of the land plus the house price. And so what the banks will do, though, is they'll lend you the money just as you need the money. So obviously, as you start out, you just got a block of land, so they'll just lend you the money for the land. And then as the house starts to get built, you'll just get charged what's called progress payments on the build. So that means you'll get charged for, as the slab goes down, you get a bill for, say, $40,000 or $50,000 or whatever it is. As the frame goes up, you get a bill, and as the brickwork goes up, you get a bill, and as the roof goes on, you get a bill. So as those bills come through to you from the builder, you send them through to the bank, and the bank will then pay it. So what that'll mean is, initially from the start, let's say the total price is, $200,000 for land, $200,000 for the house. So the first thing you're going to settle on is the land for $200,000. So then the bank's going to give you the $200,000 for the land up front. What they will want you to do is they'll want you to kick in your 20% of the total amount. So let's say it's going to be 20% of $400,000, which is the land plus the house amount. If you're putting in 20% of that, that means you need $80,000 to kick in up front. So the bank will want you to kick in your $80,000 up front at the start, and then it'll go towards the land. And then also then they'll start paying out the build as it happens, basically. So as you get a bill through for the land, then you just pay that out. For the slab, they'll pay that out, and there's the frame. So that's where the progress payments work. What happens at the end of the loan, you have your total loan, which in the example of a $400,000 property, you're going to have a total loan of $360,000, and then you've got the $320,000. Sorry, I got the number wrong. $320,000, which means you have your equity in there of $80,000 sitting in the property. So that's basically all it is. So it's the same as if you're going for a loan for an existing house. The only difference is the bank just lends you the money as you need it. So which is called progress payments. So thing to understand, though, is not all banks are willing to do construction loans, which is where they pay you to give you money to build your house. So it might be worth your while just asking your bank whether they do a construction loan, and just making sure that they're going to be able to cover you for what you need to do. So hopefully that made a bit of sense, guys. Hey, Rabi Hossein, thank you for joining me. So hopefully that made a bit of sense, and hopefully you don't get too stressed about the whole, buying a block of land and building thing and trying to organise all your finances. As far as the bank's concerned, it's not a particularly unusual thing. They're pretty used to it now, so I wouldn't be too worried about it if I was you. So hopefully you found that useful, and if you did, I'd appreciate if you click on a like there, and also, if you think someone else might find this useful, if you click on the share button, that would be fantastic. If you've got any questions or comments, feel free to put that in the comment box down below. If you've got something else you'd like to answer in the future, then put a comment in there and tell me what you'd like answered, and I'm happy to do that in a future episode. So I look forward to talking to you soon, and I'll see you next time. Bye.